Welcome back. It's time now for business. I'm joined by our business editor, Owen Fairclough. Hello again.
Hi, Melissa.
We're going to begin with this big development in Libya's oil story.
Yeah, in Libya, of course, Melissa, the battle for refineries was every bit as dramatic as the devastation left behind it. The civil war, of course, in Libya last year crippled oil production in the North African country, and it was feared that full capacity wouldn't be reached until at least 2013. But now oil authorities in Libya are reporting they're well ahead of that schedule. The concern now, though, is that they may now be behind the oil price curve. Yuka Roy has the story for us.
The Zawiya oil refinery, about 50 kilometers west of Tripoli. Last year, seizure of this site by rebel forces helped accelerate the fall of Muammar Gaddafi's regime. It resumed operations last October and is now working at full speed again.
In late November last year, we managed to restore 100% of our production capacity and return to our previous performance level.
Libyan officials say the country's total oil production has recovered faster than expected, and it's set to return to the pre-war level of 1.7 million barrels per day within a few months.
We are now more than 80% of the average daily production in January 2011. Now we achieved 1.4 per day.
The news is reassuring in the face of growing worries over global oil production. Increased sanctions against Iran, as well as unrest in Syria, Yemen and South Sudan, have lowered global output and pushed oil prices up in the past few months. But how much impact it will have in the long run remains unclear. After reaching near record high levels, global prices have actually started going down in the last few weeks, after governments in the US, Europe and Japan suggested tapping into their strategic oil reserves like they did in 2011. Uncertainty remains in Libya itself. Authorities are set to start investigating oil and gas contracts between foreign companies and the previous regime over allegations of widespread corruption. It's unlikely the country's oil industry will fully return to normal until after elections in June.
Long-term outlook then for oil, difficult to call, Owen. It's been giving investors, of course, a headache too. Most of them, though, have Easter Monday off, unlike us.
And oil is still trading, as are we, Melissa. Oil is down by around $1 in the last 24 hours, of course, feeding into that idea that the oil price has at least peaked, at least for now. But as you say, many markets in the West, at least, are shut. Asian markets are trading. Don't expect to see anything, any great volumes there on those markets. You can see there the Nikkei down over 1%. It's been all over the place today, but the message is definitely in the red today. There is news reports that Sony is getting rid of around 10,000 jobs. We'll have more on that in a moment. The Shanghai Composite as well. Inflation is troubling China once again. The latest figures there show that inflation is above 3.5%, at least for March.
All a bit quiet on the markets, and yet an important week for investors coming up.
It is a big week. This is the first set of earnings we're going to have for 2012, the first quarter for many of the world's biggest companies. The problem is right now that most investors and many market analysts think they're actually going to have a very disappointing earnings season. And yet it goes against the grain somewhat. We've seen world markets flying in the last 3 months. Some markets are up as high as 30% or have been in the past 3 months, managing to wipe out many of the losses that they sustained during 2011. But according to Reuters, on the S&P 500, the earnings forecast for those companies is likely to be just 3.2%. So 3.2% growth in terms of earnings. It's not bad. But if you compare it to the first quarter of 2011, we saw earnings up some 19%. So you can see the contrast. Suddenly, earnings are starting to tail off. Companies just aren't making as much money as they were. And yet the markets are rebounding, and it's leaving a lot of people worrying that maybe we're just not going to see any kind of sustained growth over the next 12 months. Maybe markets are going to start to dip once again over the next couple of months. Some of the stocks to watch, well, Google are going to report their results. They've been doing pretty well. They've held their heads high up. They're up by around 10% year on year. But look out for Alcoa, the world's biggest aluminium producer. Its shares are down 45% for the year, and this is seen as very much a bellwether stock. Whatever Alcoa tends to dictate what the rest of the earnings season will look like.
The message seems to be then, Owen, that one should get used to lower returns on investments.
Yeah, 3.2% is no great shakes, is it? When you think that during the boom years, we were seeing companies regularly reporting huge earnings, huge growth on their returns. One investor who does think that people should start to get used to lower returns is Bill Gross, the co-founder of PIMCO, the world's biggest bond fund. This tweet made me laugh over the weekend. He says, investors looking for a golden egg should be satisfied with marshmallow chickens and jelly beans. He says you're going to get 4 to 6% returns on stocks, maybe 4% on bonds, which is not bad. But the message very much, these are not going to be great returns for the long term.
We're going to have a look now at some of the rest of the day's business headlines. Sony is to get rid of 10,000 jobs, equivalent to 6% of its workforce by the end of the year. That's according to the Nikkei newspaper. It's understood the Japanese electronics maker will ask 7 directors, including Chairman Howard Stringer, to return their bonuses. Sony is heading for a second successive year in the red, with 2012 results expected to show a $2.9 billion loss.
Iberia has been forced to cancel more than 100 flights as the first of 30 pilot strikes begins. The Spanish airline has already been hit by a dozen strikes in the last 4 months. It now faces the prospect of rolling walkouts until July. Unions are protesting against the creation of Iberia Express, a low-cost subsidiary that started service at the end of last month.
And Britain's BG Group says it's on course to become Brazil's biggest foreign producer. The energy group has announced a $2 billion investment in research into Brazil's vast offshore reserves. The head of the company's Brazilian operations says BG investments are likely to top $42 billion by 2020.
Now then, Melissa, I think it's safe to say that Disneyland Paris tends to divide opinion a little bit. I've never been myself, read lots about it.
Well, there are those grown-ups who've been and those grown-ups who haven't. I'd say that's pretty well what divides it.
There you go. Well, it'll open its gates, of course, a few hours from now. The usual bank holiday hordes will be there, banging on the gates to get in. And later this week, Disneyland Paris will celebrate its 20th anniversary. The attraction is now Europe's most visited, with nearly 16 million customers alone last year. And yet its evolution into a success story has been far from easy.
Welcome to Walt Disney Company.
This was back in 1987. After years of negotiations, the Disney Corporation finally picked France, not Spain, as its first European theme park site. Except when the park finally opened on the 12th of April 1992, the magic didn't work at first.
It's not certain that Disney was well prepared for this. The initial problems came from the fact that Disney thought of Europe as this one big country with a European customer profile, but there is no European profile.
The company suffered massive losses for years, but gradually the formula began to work. Attractions were added and a second theme park opened in 2002. Disneyland Paris today boasts 57 rides, 62 shops and 5,800 hotel rooms, even its own international rail terminal. Disneyland says its park also offers a welcome escape from the harsh realities of the economic downturn.
We offer a unique, protected experience. You come here for a day, 2 days or 3 days into an environment that will make you forget the sad aspects of your life.
Today, Disneyland Paris is Europe's top tourist destination, ahead of the Louvre and the Eiffel Tower. And Disney doesn't want to stop there. A third French theme park is already on the horizon.
Topping even the Louvre.
That's amazing, don't you think? I didn't know that. I assumed that the Eiffel Tower and the Louvre were the world's most visited.
You wait till you're children, you'll be dragged to these things like the rest of us. Just coming up to 8 o'clock here in Paris. In a couple of minutes, my colleague Stuart North will be back with all the very latest international headlines. Do stay with us here on France 24.